what's the next trade on banks? Our next guest has some strong opinions, to say the least, on the subject. Christopher Whalen, otherwise known as Wales, of Institutional Risk Analytics, downgraded Goldman Sachs to a neutral last night after the bell. He joins us on the Fast Line. Chris, always great to have you with us.
Hey, guys.
At what point does Goldman become attractive? I mean, it's down to $184, or are there real problems with its business?
Well, the thing I didn't like out of this recent earnings release was that you saw the core investment banking businesses all down, and they made the number and exceeded everyone's estimate based on trading. But if you can, if you want to invest in a hedge fund, I can find cheaper ways to do it. You know what I'm saying? And the question I don't have any visibility on from management, by the way, is how are these basic lines, asset management, the IB, the stuff that we hope is relatively stable, going to perform in the next couple of quarters? Because my fear is they got a bump earlier in the year with the restructuring and everything else, but that may not be present in the future.
Put it into context for us, though, Chris, because most analysts come on, they say, you know what, Goldman Sachs is still best of breed when you compare to the likes of JP Morgan, et cetera, et cetera. I mean, do you agree with that or no?
No, look,
obviously not.
Well, no, it's not a bank. You don't want to talk about Goldman and JP Morgan in the same breath, because they're not the same business. On the other hand, if you want to talk about them vis-a-vis Morgan Stanley, that's, I think, a more reasonable comparison. JP obviously has a huge investment banking business, but the reason I've had them on a negative for almost a month is because I think the credit side is going to drag them in the loss next year.
Hey, Wales, I got a quick question for you. And you talk about Goldman Sachs, you say it's you're just investing in a hedge fund. Most people are not privy to be able to get into these hedge funds because of the dollar restrictions that's in front of them. This is a hedge fund that is clicking on all cylinders right now. And look at these numbers they're putting up, right?
Absolutely. Look, I had them on a positive outlook for this year because they, they were making money.
Hey, Wales, though, should we then not be valuing Goldman Sachs on a price to book or some metrics that we would be looking at banks? Because at 1.8 times price to book, I don't think Goldman's particularly expensive. And I agree with Pete on their prop book. Look, they've reinvented this prop book over and over again. It's very difficult to value that out there. But I'm just curious, where do you line up on that?
They are hyper-flexible. There's no question. You're buying a partial monopoly. But do you think that Jamie Dimon and the other players who want a piece of this pie are going to let them continue to have as big a piece as they have?
What pie are we talking about?
Very interesting watching that competition.
Well, Jamie's getting it too, though. I mean, there's 4 guys left.
Sure.
So why doesn't that continue?
JP just barely made those numbers. It was very tight. They had a huge other category this time around. It was biggest other we've had in over a year. So, very interesting earnings from JP. Efficiency was up, by the way, so their costs are rising. The thing that really scared me, though, about this week was Citi. That revenue number, 20 billion run rate, has got to go up. Because if it's not up in Q4, then we got the same problem we had a year ago, which is they ran out of revenue. They didn't have any more money for reserves.
Can you connect the dots for us in terms of Bank of America's results and Citigroup results? What does that bode for a Wells Fargo or any of the other regional banks to come out?
Well, BA wasn't a surprise, frankly. We knew that credit was going to be a problem, so it's a no-brainer. They're still not fessing up sufficiently to their off-balance sheet, in my opinion. Wells, on the other hand, I think has been much more forthright, but they're not talking either. The entire Wells business, by the way, is still held to maturity, and they're trying to flog Wachovia and get rid of that first. But I got to say, I'm negative on all 4 of the zombies right now. The dance party is just heating up, and we're going to have some very interesting stuff to cover next year, because when the FASB rule finally changes and these big banks have to admit what they've got in terms of off-balance sheet exposure, this discussion is going to change dramatically.
All right. We'll have you back then, Wales. Thanks so much. Chris Whalen of Institutional Risk Analytics.
That's a salty whale today. I mean, I'll tell you.
He didn't sound as bitter, though. I thought he was going to be more bitter. I thought the Goldman Sachs, he sounded a little bit more bullish than he started off, maybe.
Yeah, that's true. Well, we always like to have the whales on. All right, don't go